Good afternoon. I'm Shelley Jones, Assistant Director of Alumni Engagement at Missouri State University. The Alumni Association is the organization through which Missouri State students continue their connection with MSU when they leave the university. The Alumni Association is a non-dues paying organization, so all of our alums are viewed as members. So the BearTalks webinar, we started the virtual BearTalks back in June with the pandemic, and these are monthly professional development sessions. So how the webinar will work today, we can't see or hear you. We do have the Q&A enabled, so you can type your questions in, and we will be doing those at the end of the presentation. We will share our panelists' information in a follow-up email that you'll be receiving tomorrow morning. So you will have an opportunity to reconnect with the panelists should you have some other general information questions. Our alumni panelists are here today. They're graciously giving up their time to assist our alumni and friends with general home buying 101 information, and they are not here today to promote their business. Unfortunately, due to time limitations, we will not be able to get to all of our questions. And as I had mentioned yesterday in our reminder email, we have had over 100 questions already pre-submitted. So that's exciting. Clearly, this is a topic people want to talk about. So let's learn some basics about home buying. Discussing this topic today will be our three alumni panelists. And then in order of their appearance, we have Chelsea Estebeau, Tim Prater, and Mike Miner. Chelsea is a real estate loan processor and closer at SFC Bank in Springfield, Missouri. She has also worked as a real estate agent, an escrow officer, and an office manager with a land title company. Additionally, she has led various budgeting classes in the community using Dave Ramsey's principles. Today, Chelsea will be discussing budgeting and how to know if you are ready to buy. Tim Prater is a mortgage loan officer at Bancorp South here in Springfield. He has been involved in the financial services and banking industry for over 25 years. He's worked in financial services as a financial advisor, branch management operations, and at one time managed a small title company. Today, Tim will be talking about establishing credit and navigating the loan process. And our final panelist, Mike Miner, is a real estate agent with Reese Nichols in Kansas City, Missouri, a position in which he has served for the past 5 years. He has rehabbed 2 houses in the Brookside area in KC and designed and built a house on Table Rock Lake in the Branson area. Today, Mike will be discussing considerations when selecting a home and finalizing the purchase. So thank you all for being with us here today. If we can go ahead and bring up the PowerPoint presentation, then we will let Chelsea get us started.
Hello, everyone. Welcome. I'm going to go ahead and start with my first slide, which is buying versus renting. I'm going to talk about some items you might want to consider if you are going to decide to rent maybe before you purchase. Perhaps you've maybe moved to a new town or a new city and you're not very familiar with the area. You might consider staying for a little while and renting until you find the part of town that you would be interested in buying. Also, if you see a relocation in your near future for a career change or family, education, anything like that, you might consider renting versus buying then if you see that in your near future. Additionally, you might be looking for something that's flexible, that doesn't have a big commitment level, anything like that. Renting would probably be a good option for you. And then while the market is really strong right now, that might make some people nervous for where it's headed in the future. So you might consider renting if you're a little uncertain or nervous what the future could hold with that. On to the next slide. We're going to talk about purchasing now. These are things that you might be ready to purchase if you kind of meet these qualifications. Maybe you're ready to establish roots in a community or a neighborhood. You're financially ready, meaning you have good credit and good income. You've also got enough money for a down payment if you're going to be taking out a loan or doing a loan program that requires a down payment. Additionally, there's going to be some other costs that you need to factor in, like moving expenses and closing costs, but I'll touch on those here in a little bit. Maybe you're ready to commit to home ownership and all that comes with it. It's not always sunshine and rainbows when you own a home. For instance, I'm not sure if my husband's watching or not, but when we bought our fourth house a few months ago, the washer did not get hooked up correctly. So we were just watching a movie in the basement and all of a sudden water's coming down the wall. So it's just things like that that you might could happen at any time. And that could be small items or it can be large items, but things do happen. And it's like a level of commitment that you have to be prepared for when you purchase a house. In addition, you might want to build equity. And right now it's a really great, strong market. People are buying houses and building equity pretty quickly. So that's something that you just don't get with an apartment or a rental property. Additionally, there are tax benefits for owning a house that you do not get when you are a renter. Now, those don't always apply, so you'll want to consult with an accountant or a tax advisor because, again, that doesn't apply to everyone, but at least it's a possibility when you own a home that you don't get when you're renting. Of course, privacy, that's a given. When you share walls, an apartment, duplex, things like that, you don't have that level of privacy as you do when you're in a single family home. Fixed payments. So if you get a fixed rate mortgage, your principal and interest will never go up through the life of the loan. There are some other factors to consider, but you don't have that guarantee when you are renting. But with a fixed rate mortgage, those do not go up. Then of course, there's a level of pride and ownership to owning your own home and knowing that you can make improvements and changes to it without having to get permission or worry about someone else approving anything. We'll move on to the next slide. So you've thought about buying. What are kind of some next steps or things that you should maybe keep in mind? First off, pay off debt. Nobody likes having debt. It just sometimes, unfortunately, is a part of life. But if you can pay off some of that credit card debt or some of those like balances that are out there, the less debt you have, you typically can borrow more money because it is a factor. When you are getting pre-approved, they look at your debt to income ratio. So they want to see how much money you're paying out for your obligations versus how much money is coming in. And then additionally, you want to create an emergency fund. This I recommend regardless of if you're purchasing a house or not. But when you buy a house, there's always going to be unplanned expenses, repairs, things that come up. So you do want to make sure you have an emergency fund. I think personally, it's good to follow a 3 to 6 month emergency fund. Based on your living expenses. So if you're a salaried or hourly employee, you might be okay with 3 to 4 months of living expenses. But if you're a commission-based or self-employed, you might want to have closer to 6 months of an emergency fund since your income is unpredictable. So next point here, you want to save money for additional costs. And there was a lot of questions on this. What are the additional costs beyond a down payment? There's going to be a lot. There's typically an appraisal, inspection, title fees, recording fees. There's a whole list of stuff, and they even vary by region and vary by lending institution. So in addition to those, though, there are potentially moving expenses. I recommend hiring a mover. It makes things go a lot smoother. You might also encounter some down payments that you have to make to get your utilities started up. Of course, home repairs, and if there's any homeowners association dues, there's always going to be fees. So I would definitely speak with a loan officer, a lending institution to kind of figure out what those fees are going to be so you can prepare. And then lastly, for this slide, consult a credit counselor. If your credit needs some improvement, there are lending institutions out there that offer that kind of service to the customers to help them get their credit where it needs to be. All right, next slide. Not all lending institutions are created equal. So just as you would shop for a car, furniture, shop around for prices, you should do the same for lending institutions and who you're gonna get your home loan through. Those big chain stores that you see here on the radio and see on TV, they charge pretty hefty fees. So you might check with a local bank or a credit union, or even talk to your family and friends and see who they've used and who they recommend. Word of mouth is a big big deal. So definitely shop rates and fees, just like you would anything else. And then also avoid buying in the top end of your budget. So while you might have a fixed rate mortgage where your principal and interest stays the same, you also have potentially other items. So that would be your taxes, your real estate property taxes, and your homeowner's insurance. So those will almost always go up in subsequent years. So you want to make sure that, you know, if you're buying at the top end of your budget, you don't want to be struggling years down the road because you can no longer afford the home. And then additionally, avoid taking out debt prior to closing. This is a huge, becomes a huge issue when you're a lending institution and you have people that are buying furniture, appliances on credit. No matter how good the deal is, you must talk to your loan officer because this can delay or even affect your qualification in general. So definitely talk to them before you give anybody your social security number to apply for any kind of credit. Next slide here. So you do want to make sure that you do have good credit. That is critical. Good credit helps you get good rates and fees and things like that. So you want to make sure that you are making your payments on time. A late notice, regardless of if you're buying a house or not, is very costly. And I will say that even with the COVID-19 pandemic going on, restrictions on lending have tightened even more. So it's very important that you are making those payments on time. You're not maxing out your credit cards and you're calling your loan officer before you decide to make any changes. Additionally, you want to avoid consolidating debt, paying off collections, things like that. You can pay off debt beforehand, but once you're in the process, things can get a little murky if you decide to switch things up and pay off a bunch of stuff before closing. So now I'm going to hand it off to Tim, and Tim's going to talk to you about different financing options and loan types.
Thanks, Chelsea. My name is Tim Prater, and I'm with Bancorp South. And I apologize, I had forgotten to unmute there for a second. My phone reminded me, so we're back on track. Welcome to the presentation this afternoon. I'm going to focus on the financing side. So tips for establishing good credit. Basically, you'll want to, if you don't already have credit, go ahead and open an account, use it wisely. If you're establishing new credit, oftentimes one of the best ways to do that is to get a cosigner on a credit card. I remember when I first entered the wonderful world of adulthood, my dad co-signed with me on a credit card, and that helped me get credit established. So that can always work well for you. And then the first card I got all by myself was at an electronics store. I had bought a VCR. When they're wanting to sell you something. So that helped me establish my credit. There are some things like that that you can do that can be very beneficial because the better your credit score, the more options that you have available to you. Next slide, please. So there are three primary types of five primary types of loans. First three are conventional loans, FHA loans, and USDA loans. On the conventional loans, those are the ones that don't fall into the government basket, so to speak. They're not FHA loans, they're not VA loans, they're not USDA loans. They range in down payment requirements from anywhere from 3% to however much you want to put down. They're great options. If you have less than 20% down, you're going to be subject to PMI. FHA, that's a great program. It's a Federal Housing Administration loan. And it's designed primarily very well for individuals. Part of their mandate is to make home ownership affordable for low to moderate income borrowers. So that works out really well. Minimal down payment, flexible sources of down payment are available with that program. USDA, that's a program that's available to individuals who are purchasing homes in what are defined as rural communities outside major metropolitan statistical areas. It allows 100% financing. It's a great program. Rates are reasonable. They do have some property requirements, so be sure to check with your lender regarding the specifics on that. Next slide, please. Okay, on VA loans, these loans are available for veterans or surviving spouses of veterans. They have some excellent benefits, 100% financing. The program itself has some flexibilities built into it for the benefit of the veterans. They do come with a VA funding fee. However, that VA funding fee is waived if the veteran has a service-related disability, whether it's 2% or 90%. So check with your lender to see if that might be a good option for you. Then the last category is kind of somewhat broad and is very specific to the financial institution. Most banks offer portfolio loans, and that's basically a loan that's secured by the bank's own source of funds, deposits on hold. So those programs can offer some flexibility above and beyond what might be available through FHA, VA, or other conventional programs. So check with your lender to see if there's some programs that they may have available that don't fit in one of the other buckets. And that can be an opportunity for some homeowners to get in with little to no money down. Next slide, please. Okay. As I mentioned earlier, conventional loans, you can get into a conventional loan with as little as 3% down. If you don't have 20% down, you're going to be paying for private mortgage insurance. And basically, that's insurance that protects the lender in the event that you default on the mortgage. It allows us to assume a little more risk sometimes. And by definition, a loan with a borrower which is 3% down is a little riskier than a loan with a borrower with 20% or more down. Minimum credit scores vary. So again, check with your lender, because most lenders have overlays that restrict the lower limit of that credit score. FHA, 3.5% down is kind of the gold standard with FHA. FHA also allows typically lower credit scores. Again, this can vary by lender, but do know that with FHA, though the minimum requirement is 3.5% down, there are some benefits to using FHA with, say, 5 to 10% down. They have a little more flexible underwriting when it comes to the credit side of things. The more money you put down, the more flexible they seem to be. USDA, again, rural development, rural housing option there, 100% financing. Minimum credit scores can vary, again, based on lender. There are some geographic restrictions, and USDA is income. You have limits in terms of the maximum household income to use that program. So again, check with your lender. VA loans, 100% financing, a great option for qualified veterans. The Veterans Administration, they do try to make those very achievable. There's some fun things that the VA will allow you to do, and check with your lender on the specifics. Next slide, please. And I know I'm talking very fast, but we're trying to condense a lot of information in a very short period of time. So, okay, pre-qualified for loans. Sorry, I hadn't advanced my slide on my side. Basically, identifying the right loan for you can be key. And that's one of the things that I try to be very mindful of when I'm working with my clients. You want to visit with your lender and basically share with them where you set in terms of income, liabilities, assets. What do you have available for the purchase of the home? What do you have in the way of reserve? You want to share all that information so that when the lender looks at that and reviews your credit and identifies what your credit scores are, they can then provide you with recommendations regarding which programs might best fit your specific needs. Okay. This allows us to effectively discuss the difference between your qualifying monthly payment and the monthly payment that works best for you. Because on paper, somebody may be able to qualify for a $300,000 house, but based on their spending habits, what they like to spend in terms of meals and entertainment, recreation, how often they plan to go on vacation, they may only want to stick with home in the 150,000 range to allow a little more flexibility in their budget. So those are conversations you'll want to have with your lender. Let your lender know what your thoughts are, because there's definitely a difference between what some people can qualify for and what some people can feel comfortable with. So share also at that time during the pre-qualification, that's a great opportunity for me to share with my clients the anticipated fees associated with the different loan programs, because each loan program has some subtleties in terms of the fees associated with them. And be sure to ask about that when you're visiting with your lender, because they can give you information based on what is specific to the program that they're discussing with you. Next slide, please. Okay, so wow, it's Mike's turn now. So what I'd like to do now is introduce Mike. He's a great guy, and he can take you through the next section of the presentation.
Yeah. Well, thank you, Tim. Chelsea and Tim have given you some great advice on buying a home you can maintain and afford. Knowing your price range will also make your home search much more efficient, because you'll be focusing on listings that work best for you. I'm going to provide a general overview of the home buying process that we hope will make you a more informed consumer. The interview does not take the place, however, of professionals who know about specific laws and market conditions and regulations in your area. Okay, so you know your price range. The great next step is to develop and refine the search for your new home. By the way, I'll be using the word home or house to refer to any listing type, for example, a single family home or condominium or a townhouse. On the screen are categories for you to refine your search. First, location. Which locations are you considering? Do you want to be in a specific school district? Do you want to be near a park or a hiking trail? Is commute time important? How about noise level from traffic, airplanes, or trains? Next, lot features. How big should the lot be? Does a lot need to be level, for example, for outdoor activities such as soccer practice? I seem to get that one a lot. Do you need a fenced yard? Home features. Do you need a garage? How many bedrooms and bathrooms do you need? Do you need a home office? Are you looking for a first floor bedroom? Is it okay if the utility room is in the basement? Next is condition. You prefer a new home or an older home? Do you mind buying a house that needs updating or repairs? Finally, what's your time frame for moving? Do you need to sell another house first? Are you waiting on a rental lease to expire? Do you need time to work on your credit score or save for a down payment? It's also useful to plan for how long you're going to stay in the new home. Will it be a starter home or a forever home, or something in between? Whether you're looking for a forever home or not, always think about features that can make a home more attractive for resale. Here are some examples: a great location, energy efficiency, a larger family room and eat-in kitchen, a dry basement, plenty of storage space and walk-in closets, a home office, first floor laundry, a patio, balcony, deck, or outdoor entertaining area, and always important to people, hardwood floors. That's a very popular item. Of course, features that are popular can change over time and vary by home type and location. Next, I'm going to talk about working with a real estate agent. Next slide, please. So why use a real estate agent? An experienced, effective agent is your expert guide through the home buying process, who will give you objective information and opinions. The agent will research and answer your questions and recommend other professionals as needed. He or she will give you help in finding the best property for you, and you will benefit from his or her previous experience of searching for houses and negotiating. And in addition to all this, the buyer's agent commission is almost always paid by the seller. So how do you find an agent? One of the best ways to find an agent is a recommendation to friends, family, and coworkers. You can also meet agents by attending open houses. There are online reviews of agents that can be helpful too. If you're relocating, perhaps your new coworkers or employer can help, or maybe you know an agent where you're living now who could recommend an agent in the city to where you're relocating. As you decide on an agent, important considerations are, is your agent available when you're available? Is he or she responsive to your questions and will keep you informed during the home buying process? In the process of buying a home, you'll encounter multiple forms. Your agent will explain them to you and fill in the blanks, but it's good to keep in mind that real estate agents are not lawyers and cannot make modifications to the forms. If you're uncertain about any of the forms, you should seek legal advice. And also, a lot of the paperwork will be online, so always be vigilant about cybercrime. Once you've chosen an agent, he or she will most likely ask you to sign a buyer's representation or agency agreement. This agreement will be for a fixed length of time, will legally bind the agent to you, and make sure the agent is putting your interests first. Next slide, please. Okay, so where to start looking? Popular consumer sites are Zillow, Trulia, and Realtor.com. Also, real estate agents can manually send you listings from the database they use, the Multiple Listing Service or MLS, or they can create automated email alerts that come to you immediately or at intervals of your choosing as listings that match your search criteria are changed or come onto the market. Agents will often let you know about coming soon listings as well. Once you're ready to start your home search, or if you've already started your home search, you may have encountered low levels of listings or listings that go under contract quickly. The inventory of houses on the market has been decreasing for the last couple of years. In fact, in the last quarter of 2020, in the Kansas City market, the number of listings was down 42% compared to the same quarter of the previous year. In the Springfield market, listings were down by 49.9%. But try not to let these figures discourage you, as there are thousands of houses being bought and sold. It just means that you need to be prepared when the right one comes along. This is where a realtor, your advocate and guide, can provide invaluable help. Next showing, please, or next slide, please. Going to open houses is a great way to begin looking at houses. You can find out about open houses on public websites such as Zillow or from realtors. Attending an open house can also help you refine your search as you consider the various features of the house. Also, be sure to compare the online pictures with what you see in the open house, as this will train you to become more discerning as you look at other online listings. If available, be sure to read the seller's disclosure document. This document contains what the seller knows about the house, such as the age of the roof and the heating system, any known issues, and what stays with the house. Legally, sellers are required to disclose any known defects or issues of the house. Note that some houses will have security systems installed, such as Ring doorbells that allow owners to see and hear inside the home while away. It's a good idea when you're inside the home or on the front porch not to say anything that might weaken your negotiating position if you're interested in the house. Private showings usually require appointments. If the home is owner occupied, more lead time for the appointment may be required. This is especially true with the number of people working and attending classes from home because of the COVID-19 pandemic. The pandemic has also had additional impacts on showings. For example, be expected to ask you to wear a mask. Many sellers require that only buyers and decision makers attend the showing, which is another good reason to get your pre-approval done right away. Keep touching to a minimum. Allow realtors or homeowners to open doors, cabinets, or drawers for you. Also, the number of people allowed in the house at any one time may be limited. If available, you might want to consider a virtual tour of the home or have your realtor preview the house for you before scheduling a showing. There are different types of virtual tours. Some are like a YouTube video tour of the home. Others allow you to use your computer to look through the house interactively. Some realtors do virtual tours using FaceTime or Zoom. This is a great tool if you're buying a house from another city. Do the next slide, please. Okay, so now you found the house you want and you're ready to make an offer. The document used for the sales contract is usually lengthy and it describes the terms, conditions, and various phases of the sale. It's good to familiarize yourself with the sales contract you'll be using before you place an offer. Basic information needed for the offer contract is your pre-approval letter if you're financing or proof of funds if you're paying cash, your legal name and marital status, earnest money amount. And note that when an offer is accepted, the earnest money must be delivered by the deadline specified in the contract. Earnest money is typically delivered and held by the seller's title company. If you pay by check, the check will be cashed immediately. Some title companies have the option to pay earnest money online. Offer amount. Your agent can help you with this by providing a market analysis for the area to make sure you're offering a good price. Closing date. This is the date you want to take possession of your new home. Flexibility here can sometimes strengthen your offer by agreeing on a date that's convenient to the seller. Home warranty. Some buyers ask the seller to purchase a 1-year warranty for them. Offer expiration. This is the deadline for the seller to expire. Sometimes there'll be a counteroffer and additional negotiation is required. Especially important is the effective date, which is the date when the buyer and the seller agree on the terms of the sale and all documents involving the offer have been signed by both parties. Deadlines in the contract are based on this date. These deadlines are important and there can be consequences if missed. Next slide, please. One of the first things you'll do after an offer is accepted, unless otherwise indicated in the contract, is begin inspections. Inspections must be completed within the inspection period in the contract and are most often paid for at the time of the inspection. This slide lists some typical and additional inspections that are done. Note that these may vary depending on the type, location, and age of the home. A whole house inspection is almost always done. The whole house inspector may recommend additional inspections based on his or her findings. So it's a good idea to have the initial inspection as early as possible to allow time for the additional inspections. Buyers typically attend the inspections or at least arrive at the end to get an initial briefing from the inspector. Buyers also receive written reports for all inspections. Inspection reports can be overwhelming, especially for older homes. Buyers' agents typically attend the inspections and can help put proper focus on significant items in the report. Once the inspections are completed, based on the inspection results, contracts typically give buyers 3 options. First, accept the property as is. Second, offer to renegotiate the terms of the sale by asking the seller to make repairs, lower the price, or both. Or thirdly, cancel the contract. If the contract is canceled, the buyer loses the money paid for the inspections, but does not have to purchase a house that he or she ultimately would not want. Earnest money is returned based on the terms of the contract. If the contract is not canceled, a final walkthrough is usually done prior to closing to make sure the seller has maintained the home, fixtures have remained in the house according to the seller's contract, and to check for any repairs done by the seller. Thank you for your time.
Okay, great. Well, thank you all so much. It does look like we have several questions that have come in. Let's start with the question that will be for all of the panelists. What is the biggest mistake that first-time home buyers make, and how can they avoid it? So, Mike, let's go ahead and have you answer it first, and then if we could go to Tim and then Chelsea.
Yeah, so I polled my office on this one, and we got this in advance. I was able to ask a few people, and they were saying not using a full-time agent, not getting pre-approved before shopping. Sorry, that might have been one of your answers, Tim or Chelsea. And thirdly was focusing on the quote-unquote pretty items in the house and not a time on the good bones, such as the foundation, roof, HVAC, and location, that sort of thing. So, thanks.
Tim?
Those were great. Yeah, I like the not focusing on the pretty items in the house. Please remember the furniture goes with the seller typically. So yes, don't focus on that. No, the thing I see most often, people will start shuffling things around as far as their credit goes. And opening new cards, paying off cards, paying down debt. Sometimes those changes can impact the credit profile. So I always recommend that people talk with their lender first before they start making a bunch of changes like that. Then the other thing, and I've seen this happen, don't make any big purchases while you're shopping for a house. I had this one guy, we had to put his closing on hold and have him return the nice new car he purchased because he wanted a new car for his new driveway. And he had to return that before he could actually close on the purchase of his home, because with the new car, his debt ratios exceeded guidelines. That was a very emotional and complicated conversation he and I had. So yes, don't make a lot of changes, don't make a lot of purchases. Remember, purchasing a home, it's as much an emotional decision as it is a numbers decision. So try to remember that you're going to feel a little conflicted, and that's normal, because what your heart wants to do isn't necessarily what your wallet will allow you to do.
All right, so what I see a lot of people make mistakes on is not shopping around for interest rates. So when I worked at the title company, of course, I would go through all of the closing paperwork with the borrowers, and I would look and see the fees they're being charged and the interest rates that they're being charged. And again, as I mentioned in my presentation, they are not all the same. And unfortunately, first-time home buyers don't know that they can shop around and don't know that. So I would look at these poor people who are buying their first house. I'm like, you are paying way too much each month for this. Or not shopping their homeowner's insurance. That's another item that you can shop around for. Don't just take the first quote that the nationwide chain will give you. Shop local companies and local people that you can actually get a hold of. It should an issue arise or you have a question on your homeowner's insurance policy. So do some research, do some looking around, because don't just accept the first person that's willing to approve you or qualify you or give you insurance. Because if they're willing to do it, there's probably someone else that can do it for a better rate as well.
Great. Okay, so let's throw out a question that came in a while ago from our attendees. Should I get pre-approved first or find a realtor first? Maybe that'd be a Tim question, you think? Or Mike, or anybody?
Well, I don't think there's either option. I think is fine, but it's best to get pre-qualified before you actually fall in love with the house. And the reason I say that is, finding an agent that you like to work with, you're going to be spending a lot of time with that person. Make sure you can find somebody you like and enjoy spending time with, because you're going to be going through lots of houses and discussing a lot of important financial stuff with that agent. And that's, a full-time realtor can be priceless. But at the same time, you also want to talk to a lender, because you don't want to spend your time looking at $300,000 and $400,000 houses when your budget may only allow you to purchase in the $40,000 to $30,000 range. Because there's a huge difference. I mean, there's even a difference between looking at houses in the $200,000 range and $180,000 range in terms of amenities that the homes oftentimes offer. So nailing down the finances and the agent, that kind of goes hand in hand, in my opinion.
Yeah, I would just echo what Tim said. It's really important to know your price range where you want to look, because it can be very disappointing if you find the perfect house and you can't afford it. So that's really important. And it's so quick to get a pre-approval. A lot of a lot of lenders have online sites where you can put in the information. Some lenders will, I know of one that actually will give a gift card for a second opinion. So if you have an opinion for somebody else, you can get a gift card for just getting a second opinion on it. So I think you can do it so quickly. You ought to go for it. And maybe Tim can talk about this, but there are different levels of pre-approval. It's always helpful to me when a person has gone further in the process of getting pre-approved, and we can present that, especially in the kind of the tight market we have. It's really important to be able to demonstrate to the seller that the sale is going to happen, because the loan is going to happen.
Yeah, I agree with everything that's said. Additionally, as they've mentioned, this market is extremely competitive, and there were some questions on that as far as offers being made when you're maybe even looking at a property. It's, homes are going in less than 24 hours if they're priced right. So you want to make sure that you are pre-approved before you step foot in that house, like they said, to make sure you can afford it, because somebody who is pre-approved or maybe even a cash offer can sweep you up under the rug if you're not ready and prepared to make an offer when you walk into a house. And that's not to say that you need to buy the first house you walk into, but if it's a house that you know that you're buying and that you've been searching, you need to be ready to make action and make an offer.
If I could just add something to what Chelsea said there, people do buy houses a little more quickly sometimes, and maybe they don't get the house they want exactly. And so it happens the sale doesn't go through for one reason or another. So if there's a house you wanted, but it went under contract, be sure to have your agent keep an eye on it, because just in case the house, we say flip sometimes, but in case the house, the sale didn't go through, and then you might even benefit, they may have done an inspection, you might be able to get the inspection that was already done on the house as well.
Okay, here's a question. I have found in the current market that when I find a home, offers are about to be made and or it is sold before I have enough time to evaluate it. For example, what is the best way to know a dollar value of the house?
Well, I have a thought on that one. I think it's really good to know the neighborhood of the house, because that your offer is going to be based on how what houses are going for in that neighborhood. And agents can generally provide you a report. We call it a comparative market analysis, or CMA report. Reese Nichols has a thing called a My Neighborhood report. They can really keep you informed on that. And I really think you should get your search criteria really well defined and know what you're looking for in a house. There's a website, it's cost versus value. That might give you some idea of the value of certain things in a house as well. Thanks.
All righty. I think this one might be a Chelsea one. How long should you plan to live in the house before you want to move out of it? Is it a bad idea to purchase a home if you plan to live in the area for less than 5 years?
Really good question, for sure. I am probably an outlier in the fact that I've moved 4 times in the last 5 or 6 years. Each of those homes I've either made money or broke even on. So if that tells you how good the market is doing right now, I would say 5 years is definitely more than enough time to buy a house in an area. Just make sure it's in a good location. And maybe if you're not planning to be there for a full 5 years, maybe 2 or 3, I would personally suggest probably buying a house that you maybe could put a little money into and build the sweat equity that way and make money a couple of years from now. And that just as long as you're buying, I guess, in a good location, a good school district, things like that, you usually shouldn't have a problem selling. Granted, we don't know what the market's going to do in a couple of years, but most people honestly aren't staying in a home for 5-10 years like they used to. So definitely, I think if you're going to be there at least a couple of years, it's something to consider. Anything less than 2 years, you might kind of weigh your options and see, maybe talk to your agent and see if they think that the market is trending to where this neighborhood is trending. Maybe it's up and coming, things like that. There's a lot of considerations, but I think 5 years is definitely more than enough time to buy a house.
Okay, anybody else have any comments related to that question? Okay, all righty, so who pays for the inspection?
The buyer pays for the inspection and usually pay for it at the time the inspections are done. And you want that because the buyer hires the inspectors because the buyer wants the inspectors to work for them. So they want them to have their best interests at heart.
What about bankruptcy? How does bankruptcy affect your ability to buy a home? And how long after a bankruptcy can you buy a home? But that's a Tim question.
It is, and I have a handy dandy little chart. Now, typically, it depends on the type of bankruptcy. For instance, Chapter 7 bankruptcy, you're going to see anywhere from 24 months to 4 years as sort of a minimum before you can move forward with a purchase. Now, if there's a home included in the bankruptcy and there's a foreclosure or short sale, that's an automatic 7 years. So um, check with your lender and identify which programs you're eligible for and what the guidelines are on those particular programs.
Okay. How do you go about calculating your budget to know what price range to look at?
I'd probably consider first, how much are you currently paying in rent? Are you comfortable with that amount? Do you have a little bit of flexibility where you can maybe pay more? Is it a stretch for you? Just kind of evaluate your finances and where you're currently at now. What are your current debts? What are your current monthly expenses? And kind of back your way into figuring out what you have left and what you'd be comfortable with. Now, your payment and how much you can afford is going to be based on the loan program you choose for, the type of loan, how much money you're putting down, your interest rate, things like that are all going to affect your payment. Of course, your homeowner's insurance as well, and your taxes. So, you might be able to afford a home in one neighborhood that might be the same price as another one, but the taxes could be twice as much. So then you no longer can afford that home because your payment is now too much. So it's hard to just kind of put a blanket budget on what you can afford. I would just take a personal look at where you're at and then talk to a loan officer. They're going to be able, when they pre-qualify you, say, you can look for homes up to this price range. And if they're a really good loan officer too, they'll probably be honest with you and say, you're pre-qualified or pre-approved, to 300,000, but given your finances, I probably wouldn't go over 250,000. It could be a stretch for you. I mean, they should be honest with you, because typically you're going to be pre-approved for an amount that is probably more than you should be buying a house for. So, if I'm being honest.
Well, and with that, one of the things you can do, there are so many online calculators for monthly mortgage payment. You can always explore those. And a rule of thumb, and this is historic. I mean, this was a rule of thumb back when I first got into the business in '95. 28% of your household income, sort of a maximum for housing. So that's principal, interest, taxes, and insurance. Guidelines can be pushed these days a little bit above that, but if you're approaching it somewhat conservatively, 28% of your gross income. But here's the thing, and again, I've said this before, check with your lender. I have people call me all the time and they're just like, hey, Tim, this is what I make. These are what my monthly payments are. Where should I be in terms of a total monthly payment? What price range should I be looking at? And you know what? It's not that hard for me to run some basic numbers and say, okay, based on what you shared, this is about what you're looking at. And then at that point, they can make the decision as to whether or not to go through with an actual application. Let me pull credit, do the pre-qualification, and make sure that my numbers match with their numbers. So it's pretty easy. And sometimes I run those numbers for people just based on a phone call, and they're just like, oh, yeah, I can only do 30,000. Well, never mind. And that saves important to them.
Okay.
Because some people don't want to have their credit pulled needlessly.
Okay. I think you kind of went out and in a little bit. Sorry about that, Tim. All righty. Mike, I think this question is one for you.
Okay.
If I want to buy a home in another state, is it better to do a virtual tour or to fly out for a few days and see the homes in person?
Okay, so I think Chelsea gave some really good advice on deciding to buy or not buy. So I assume you've gone through that and you decided you're going to buy. I recently sold a house to a person that didn't see the house till they moved into it. We did all the work via FaceTime, and she did have a relative in town, so they were kind of looking as well. But it worked out pretty well. Obviously, it would be good to be there the whole time, but I think you really want to do your research, know the area, know where you want to live, know that you're actually going to stay there wherever you're moving to. I know sometimes jobs will have like a year probation or something, make sure you really want to be there, buy a house for sure in the area. And also it'd be good to attach to a realtor there to find out what their average days on market is. And that could tell you, how quickly in that area that homes are being sold. If it's slow, or the type of house you're wanting, if those days on market aren't so great, maybe it's fine to wait and go out for a weekend and see houses. But if they're moving fast, if you really want to buy a house, the FaceTime with the agent might be an option. And obviously get to know your agent really, really well and make sure that you really honed in on that criteria and know what you really want. Okay.
Great. When filling out the paperwork for a house, are there any hidden fees that we should be aware of? Maybe Chelsea, start that one off.
Sure. So typically, when you do go under contract and in correlation with your agent, they should be able to kind of sit down with you and say, there's more than likely going to be an appraisal fee. You are going to have loan origination fees. The loan origination fees are going to come from the lender. And then there's also going to be title fees. Those will typically come from the lender. They're going to give you what's called a loan estimate up front. So once you have your property selected, they're going to give you a breakdown of your estimated cash to close. And that's going to include your closing costs, your down payment, anything like that is an estimate. And the recent guidelines basically hold us to that standard. So what we give you and present you, we have to stick to from the get-go without a lot of leeway or things like that. So you're going to know your interest rate very early on. You're going to know what those fees are going to be. But if you want to know those ahead of time, again, you can talk to your loan officer. And if you're interested in a house, you can even give them the address and they can run initial numbers, preliminary figures on what they think that the cost could be. It's a pretty simple process to do that. Again, just find a loan officer that you feel comfortable with and that can do that for you.
Okay. Does the realtor always work for the buyer? And then who pays the realtor?
I guess that was for me, maybe. Yes, so we don't get paid till a house is sold typically. That's kind of how it works. And in almost all cases, the seller pays for the commission that go to the two realtors. It almost always works that way. So the buyer really doesn't have to worry too much about that.
Okay. What happens when the home is being sold as is? Do you have that much, Mike?
Yeah. We actually do in the current market, because people are so willing to buy a house, they'll buy it as is, so the seller will accept the offer. We refer to that in its present condition. Now, when a house is being sold in its present condition, there are three levels of that really. And one is, I'm not going to do any inspections. I'm just going to buy it, and that's the end of it. The one that most people choose is a mid-level, where you can still do inspections on the house, and during that inspection period, you can still walk away from the deal if there are unacceptable conditions in the house. So that's kind of how that works.
Okay. Can each of you give a few updates that are most useful to begin working toward increasing the value in your first year? So I guess you bought a house and you want to increase the value for down the road, you want to sell it. That's how I'm taking that.
I previously mentioned that cash versus value. So how much you pay to have your new storm doors on, or the garage door apparently is one that really pays off for some reason in reports. But there are these different. If you just Google cost versus value, those are pretty good places to start. It can be a little depressing because a lot of things you only pay back at about 50%. So that's kind of important.
I think a pretty easy, cost-effective one is paint. If you buy a house with a lot of funky colors and a lot of different rooms, a neutral paint color does a lot just to make it kind of give a first impression. Also, some bathroom remodels, but as Mike mentioned, you're not going to always get dollar for dollar on that. Bathrooms and kitchens are a big deal to buyers when they're looking at a home. That's kind of those items that they look at and to see how they're updated, because they're usually the most costly. But if you're kind of on a budget, I'd recommend paint.
I think landscaping is a great way to make a good first impression. And it doesn't have to be real costly, but updating some of the landscaping up front oftentimes can make a difference, especially with some of the older homes. Freshen things up a little bit, and that can be a fairly cost-effective approach also.
What are some of the typical closing costs?
Typical closing costs would be bank fees, appraisal, title company charges, homeowners insurance. You know, those are some of the big items that people will end up paying at closing, because with the closing, you pay your first year's homeowners insurance premium up front. The appraisal is paid up front. Bank fees, title company charges, buyer ones.
Okay. And what final tip of wisdom would each of you like to share related to this topic? Chelsea gets to go first.
I know I mentioned it earlier and I'm kind of beating it to a dead horse, but I would just do your research, talk to friends, talk to family or coworkers, like Mike has mentioned as well. You just word of mouth and even who to avoid dealing with goes a long way. You want to make sure that you're dealing with people that are ethical in their practices, because first-time home buyers are very vulnerable because they don't necessarily know everything that their professionals know. So find somebody that you do trust that comes with a good reputation, because you are going to be sharing. Basically, you're going to be an open book to your entire financial history. Potentially, if you've had a bankruptcy, I mean, there's a lot of laundry that you are airing out to people, and you want to make sure these are people you trust. And I know there was a question that, you know, should you hire a friend or someone that you know? And you just need to be careful. Sometimes it is better to start with someone that you don't really know, because this kind of industry, you can, I don't want to say burn bridges, but it's a stressful process. And I know friendships and things have been hurt along the way. So just make sure you hire good ethical professionals with good reputations.
Tim, you want to go next?
Yeah, the most important piece of advice I would give a first-time home buyer, find an agent that you feel really comfortable with, because you're going to be spending a lot of time with that person, and that person is going to be guiding you through the nuts and bolts of it, because purchasing a home comes down to emotion. Then get with a lender who can guide you through the finances. Those are the two key areas, and just know that they're going to ask you all kinds of questions. And if you don't feel comfortable with them, you're not going to feel comfortable answering their questions.
Okay, and Mike, just a few brief words there. We're kind of
Very
almost
brief,
at
I'm seeing
time.
the clock here. I would say just keep in mind you're the client or you're the customer, and if something doesn't seem quite right, you don't understand something, be sure and ask, because you're the client, you're the customer, and if something doesn't seem right, if you're uncomfortable, just say something.
Okay, great. So thank you all for joining us this afternoon. That we hope that you enjoyed what you heard today and picked up some good information about Home Buying 101. Again, additional resources will be included in your follow-up email, as well as contact information for the panelists and a survey so that you can suggest future topics and alumni presenters. We also are going to have several resources attached to that email, so be looking for that. Our next BearTalks webinar will be Thursday, February 11th from noon to 1 p.m. Central Time. And our topic is how to attract and keep good employees. So thank you all for being part of today's presentation, and have a great afternoon.
Thanks. Bye.
Thanks.